Alright, good morning traders. Today is the 5th of October 2022. It's just coming up to 10:45 a.m. here in the UK. So I'm just going to do the checks, make sure that everything's working, audio and video. I think everything seems to be working okay. And sound is working as well. Okay, good. So crack straight on with the calendar for this week. Obviously, quite a few things that have been happening, loads of speaking going on. The most important thing today, there's the ADP non-farm employment change, which is basically just an estimate. It's not really. It's like it just says here estimated change in the number of employed people. So this is actually it's analyzed by the automatic data processing. So this is not the real non-farm employment change. What the real thing that's actually issued by the government or the Federal Reserve is going to be on Friday. So Friday, October the 7th, around about 1:30 p.m. here in the UK, we've got the average hourly earnings, we've got the non-farm employment change and the unemployment rate. So the jobs numbers are coming out on Friday, and that will definitely cause some volatility. Or at least it should cause some volatility leading up to the weekend. So that's what we've got coming up on Friday. And then the following week, we've got a pretty big week with the CPI and the PPI as well. So if you don't know what the PPI is, it's basically the producer price index. And then we've got the consumer price index on Thursday. And core retail sales as well. So we've got the CPI and the PPI happening on October the 12th and the 13th. So Wednesday and Thursday, okay? And this is all happening around about the New York session, 1:30 p.m. So that's what we got for next week. So it's likely that we're going to get some volatility going into those figures. And then obviously this week, like I said, Friday is the day that we should see some volatility coming. So let's move on straight to the charts. So on the heat map, you can see that the cryptocurrency heat map is everything's pretty much in the red. Very few exceptions here. But yeah, the great majority of it is in the red. With the stock market, however, everything seems to be in the green. So there's a little bit of a relief bounce going on. There's no sign of a market rally just yet, and I'll show you that in the charts. But it's definitely a little bit of a relief bounce so far. There is potential for being a bear market rally, but we'll have to go through some figures and some numbers in order to assess if that is actually going to be the case, and where do we start looking for a rally. So let's move on to the charts. Here we start with the S&P, and you can see that we bounced exactly around about 3,600 points. Okay, so we start here with the weekly. This is the figure that I've been telling you for ages, which is basically this low volume node here. Right, so we were looking at this area here, and that's basically, if you look over to your right here with the cross, the crosshairs. In fact, I'm going to do it like this. 3590. Okay, so I was 10 points off. But I've been saying this for a while, that if we were to have a bounce, it would be here. This is an important level. It's a low volume node as well. So yeah, so that's basically what's happened. We got a bounce there. Now, of course, there's going to be resistance going forward, and for me, the most important level of resistance is this one here, okay? That basically, this bounce, what it means is that we got rejected from this previous balance here, okay? So that means that we're still not getting acceptance inside of there, and therefore, that means that we're getting still accepted inside of this balance here, right? So with the tapering volume that we've got here, the price could very easily, it's not surprising to see this illiquid candle here, the price could easily accelerate to the upside, okay? Now, the area that I'd be looking for perhaps resistance would be this previous level here of resistance, right? Which is the value area low of 2021, right? So that's sitting at round about 3,900 points, okay? That's the point of control of this whole range, okay? That's the high volume node of that whole range here. If, however, we do break above this, then the next level that I'll be looking is that big round number of 4,000 points. Okay, 4,000 points is also the developing value area low of this year, and of course that's, you know, a really important level. If we get back all the way up there, then you could, you know, we could probably bet on a bear market rally. But for me, this is going to be sort of like stopped either here or even at 4,000. So 3,900. 4,000 points is where basically this gets stopped and perhaps continues lower. Okay, so there's no guarantee of any of this, of course. I'm just looking at the levels of resistance. So I'm looking at this one and I'm looking at this one. Okay, so you could consider that a bear market rally, I'm sure. But so we've still got some room for the upside. All right, but what we've seen here is that basically we had some highs put in, we swept the highs, came lower. Right here we had some highs put in, we swept the highs, we came lower. Here we had some highs put in, we swept the highs, we went lower. Okay, so you know there's no change in market structure. We're still printing new lows here, right? Where this was the lows, we've just printed a lower low, and we're still printing lower highs, right? So unless the market goes all the way up here, which I think it's very unlikely at the moment with the present climate on the macro, I don't think that is kind of possible. So this is just a little sort of bear market rally, a short squeeze, whatever you want to call it. And the key levels on the higher time frames is, like I said, 3,900 and 4,000 points, okay, in order to see any significant change. Of course, if the price manages to get above 4,000 points and we start finding acceptance inside of this here, then it's risk on, and I think we've got legs to go all the way up to 4,200 points and maybe even all the way up here, but that's way too far ahead. I don't think we're going to get past this level here, 3,900 points. That's just my personal opinion, at least not in the next sort of week or so. If we look at the long-term VWAPs, you can see that basically we had a little bit of a short squeeze here, right? We are above the developing weekly value here on the bottom left, right? But we're finding acceptance. So let me just make this one here on the quarterly VWAP. This is the new quarter, obviously, that has just been printed, but we're finding acceptance inside the previous quarter. Okay, so the previous quarter kind of stopped here. We've kind of just came all the way back to there, right? We've got a nice little low volume node here, 3,700 points, 3,710, something like that, which is basically where the quarterly VWAP is. If we can bounce here, then like I said, we've got a good chance of going all the way up to 3,900 points, which is the previous quarter VWAP here, and maybe even if we find acceptance inside of here, that maybe even to that 4,000 point mark there. So no difference from what I'm seeing on the higher time frames. That's basically what's going on here, and that's pretty much it. Okay, so in terms of support, if we come all the way back down, we want to see 3,720 points hold as support. Okay, this is a previous level of resistance here. We want to see that hold as support. Okay, if the price comes all the way back here, holds this as support, then we've got a strong chance to going a little bit further up and going to those levels that I was talking about, levels of resistance. Okay, so we'll just have to wait and see if that happens. So as long as, obviously, this is still very highly correlated with Bitcoin, and as long as we're going up on the S&P, then Bitcoin will find a bid and will go up as well. Of course, if we start losing levels here and this was just a short squeeze, then we're going to print new lows and Bitcoin will follow suit. So enough for that. Let's go on to Bitcoin because I don't want to take too long with this. We start with the long-term VWAPs here. You can see here, bottom down approach, start with the higher time frames, right? So you can see here on the yearly VWAP, the value area low of the developing year VWAP has already been rejected. It's not a very strong rejection, but in context, we got rejected here, we got rejected here, we also got rejected here, and now here we are. Okay, so it's looking slightly bearish here. It's not looking too great in terms of the yearly VWAP, but you know, that's not extremely accurate and not very useful on the lower time frames. It's just to give us an idea of where we are in terms of context. For the quarterly VWAP, it's interesting that we found a bid. This short squeeze got us back inside the previous quarterly value, right? So we're kind of still deciding if we're going to stay inside of this and we're going to rotate. It's early days. I mean, We've got a low volume node here at 19,700. This was a key level of resistance going forward, and we've just broken above that. So as long as we hold 19,700, I think we've got potential to going much further up, right? So let me just go back onto all the time frames together. So we're rotational inside the previous quarter. We're rotational inside the previous month here on the bottom right. Okay, and I just want you to pay attention to this particular level here. Okay, so in fact I'm going to do it here on the bottom left. And this yellow line that I've just put here on the bottom left is basically not the previous week or the week before that. It's basically this value area here, right? This whole thing here. And this is basically where the weekly VWAP closed there, right? So I'm looking at this level here, right? If you look at that level there, and if you look over to your right onto the monthly VWAP, right? Let me put this again on. You can see that it's perfect confluence with the previous month value area low. Okay, so this is a significant level. Where is that sitting? Round about 20,700, right? So if you look here, it's basically where we're still rotational inside of this one here. But if we find acceptance above here, like this, then we've got a strong possibility of going all the way up to $22,200. Okay, but 20,700 is still an important level of resistance, and I think because we've got so much confluence on different time frames that it would be silly to ignore, with the current market conditions, it would be silly to ignore that level at 20,700. I think this is probably going to cap the price for a while, unless the S&P decides to go on a tear up. Okay, but you can see that almost on every single long-term VWAP, this has confluence, right? So it's the value area high of the previous month. It's also very close to where the this low volume node here is, here on the top right hand corner. It's also very close to the previous quarter VWAP close, and pretty much straight into where that weekly VWAP with the week of the 17th of September closed, right? Where the weekly VWAP closed there. So there's just plenty of confluence there. Also with the yearly VWAP, it's basically a key level of getting acceptance inside of that, yet again. So 20,700, I'll show you on the market profile as well. It's a very important level. Again, like I said, if we do break above that, then don't fade it. I think we've got legs to go at least to around about $22,000. Okay, 22,000, maybe even $23,000, but we'll have to wait and see about that. Okay, we could see a massive short squeeze, definitely up to those levels. I want you to notice here something as well on the monthly VWAP and on this 4-hour chart here on Coinbase, that we've got basically a 4-hour order block here. Right, I'm basically highlighting this one here, this order block here, and that's got perfect confluence with that $22,222, let's say. So all the twos, right? So if we break above this and we manage to hold this as support, there's very little resistance. You can see this is a larger liquid candle. There's very little resistance, and I wouldn't be surprised to see this pump all the way up to here. At these levels here at 22,200, I would probably be looking for shorts here. Okay, that would almost certainly mean that we are at the end of the rally here for the S&P as well. Okay, so we'll just have to wait and see. But like I said, for now, this $20,700 level is definitely the level that I'll be looking for shorts if I'm in front of the computer, because it's got plenty of confluence here in terms of resistance, right? So I wouldn't be betting that we go above this, not with the current market conditions. All right, nothing's changed. There is still a war going on. There's still a supply chain crisis. There is still all this shit going on with inflation and everything else. So I doubt very much that the Federal Reserve is going to do a pivot anytime soon. So I don't think this is going to change anytime soon. So again, this could be just a little short squeeze, and I'm looking at $20,700 for the line in the sand. Break above that and we go on to the next level. If we do not break above that, that's a great entry for a short, and we could be going all the way back down to print new lows, and perhaps even Where is that level? Let me just bear me a second. Perhaps even take these levels here, right? Take this poor low here and perhaps go a little bit lower. If I look at this on the yearly, like this, right? This is a little bit of consolidation here. This is basically where we've been bouncing. And like I said before, if we do break lower and we find ourselves at the lows here, this is like, there's hardly any volume there, right? So you'd be looking at this high volume node here around about 15,400, maybe just a little bit lower here, maybe 13,400. But I mean, the line in the sand really is round about here, 12,600. Like I said before, this 12,600 level, it really is the last hold, if you like, for the bears, really. If we manage to find ourselves down here and we find acceptance below here, it's a long way down, right? Look at the size of this high volume cluster. It's going to be acceptance here means almost certainly that we find ourselves going all the way back down here to the value area low of 2020. But again, this is too far away and there's no point of trying to think about this. What I'm trying to just let you guys know here is that if this consolidation level here fails, there's hardly any volume there. So the price could accelerate very quickly all the way up to here and then bounce, right? So it's going to be low volume, means that we're almost certainly going to do like this type of candle here, like a very, very sharp, very quick move to the downside. And a lot of people will be panicking, and that will be the capitulation that everybody's been calling out for. So just be careful with that. Don't fall into the traps thinking that we're just going to go much higher now. You know, this is no different than the S&P. We printed a high, swept the highs, went lower. Printed a high, swept the highs, went lower. Printed a high here, swept the highs, went lower. Okay, so here we printed a high, we swept the highs, went lower, but we didn't take out the previous low yet. Okay, but we did find resistance around about here at 23k. So anybody that's shouting anything above 22, 23k, it's just fantasy, right? I'll believe it when I see it. So just bear that in mind. Try not to follow what people are saying on Twitter. Don't think about the levels all the way up here or all the way down here. Just trade level to level and just try and stay on the lower time frames and you'll be all right. And just deal with things as they come along. So anyway, enough rambling. Levels of interest, $22,700, okay? If we can break above that, then we've got a little bit more upside to come, potentially all the way to 22,200. If we do not break to the upside, if we find resistance here at 20,700, then we're going to go lower, and I do think that we perhaps take all of these lows out that we've been putting in for the last sort of couple of weeks. All right, so moving on to exo charts, I guess I should start here with the weekly. And on the weekly market profile, I've got a 2-day composite value here that's giving me this blue area that you're seeing here. We're finding acceptance inside of it. The bottom of that is 19,600. We found resistance. Where did we find resistance here? We found resistance at this naked value area high here. Okay, we've just taken that. And now we're kind of like, sort of like, it looks like we could be rotating between these two levels, right? 21,300, 19,600. That's potentially what could happen. If we do, however, find like I said, if we find a bit above 20,700, yeah, this is definitely a level of interest. But again, we're looking at this balance here as well, 22,500 as strong level of resistance. We've already been rejected there once, so I wouldn't be surprised that even if we find ourselves up here, we do something like this and then get acceptance and go below again. So, you know, let's just see if we can find acceptance inside of this. This is just the weekly. It's a little bit inaccurate. Let's look at the daily market profile. Again, I've got I think this is a 10-day composite value. This is a 6-day composite value up here. This is the 10-day highlighted in blue, and this here is a 6 or 7-day composite that we've printed in the last few days. We got away from this. We go all the way up here, and now we're trying to find acceptance here. Guess where the value area low of this composite value area is 19,700. So if 19,700 holds, which again, on Bitcoin. Let me just point it out here to you guys. 19,700 is where the weekly VWAP is, where the monthly VWAP is. Right, in fact, on the monthly, you can see that it's not just this month's, it's also the previous month's VWAP at 19,770. It's where the weekly VWAP is, and it's also where the developing quarterly VWAP is, obviously, because it's just the beginning of the quarter, right? It's still in the first month. So 19,700 is an important level, 20,700 is an important level, okay? So just remember that. If we cannot find acceptance above here, then we're going to go much lower and accept, probably accept inside of here and go and take out those lows. So again, it's painting the same picture that we were showing you on the candlestick charts. Finding acceptance above these levels, if we do go up, like I said, above 20,700, then the levels that I'm looking at, we've got this 6-day composite value area here, and we've got some single prints that go all the way to 22k, and we've even got a naked value area high at 22,800, but that's way too far ahead there. So I do think that finding acceptance above 20,700, that means that we could almost certainly try and take out these single prints. If we do for some reason have a short squeeze and we print fill these single prints, that means the market's changed somehow, right? So this here is really the line in the sand for the bulls. If we can print above this and we continue higher, then I wouldn't fade this. I think we might have legs to go much further up, but I just don't see it at the moment, okay? And I could be wrong, but I really don't see it. So let's have a look at to see if these levels marry up on the volume profile as well. And if I make this a little bit bigger, you can see that this is basically taken. These areas that I've put here, the gray, the green, and the red rectangle, are basically areas based on a volume profile. Let me just take the points of control off, like that. Okay, so that's basically all of this. This is consolidation. This is consolidation down here, the red and the gray. The green was an imbalance, but we've been in this, feeling this low balance, right? This imbalance for quite some time. Now it does look like we got rejected from the lows here, and we're finding acceptance inside of here. So let's analyze this a little bit closer. Lo and behold, 19,700 is that level there, right? So if this holds, then I've got no reason to doubt that we could be heading all our way to 22k, right? That's where that 4-hour order block is. That's where an imbalance is, and the beginning of a new balance area all the way up here, right? This level here is for shorts. There's just no two ways about it, okay? This is a larger liquid candle like we saw on the 4-hour chart, right? There's that 4-hour order block there. There's going to be buyers trapped there on this push up, right? On this squeeze that we saw to the upside. So I've got no doubt that if we find ourselves up there, that this is going to be resistance, right? So if we do go to 22k, do yourself a favor and start looking for shorts, right? That's if we even can break above that $20,700 level, okay, which is basically this level of resistance here, like I was saying, right, on the lower, on the long-term VWAPs. So very key is that 19,700 holds its support, and then the next level of resistance, like I said, will be here, 20,700. If we break above that, we're going to 22k, but there, that will be resistance as well, okay? So that's basically what I'm seeing. If I put the naked points of control on again, we've got a naked point of control here at 21,700. It's very close to that value area high there, right? Or the composite or the balance high, right? So just, yeah, it's potentially, we've taken out this naked point of control here. We've left a naked point of control down here at 19,190. If we get acceptance back below 19,700, then I think that we're going to go lower and take out all of these lows, like I was saying. However, acceptance above here means that we almost certainly go high, and we're looking at 22k for the next level. Okay, so that's pretty much what I'm seeing here on the volume profile. So here we are. I mean, I think that's pretty clear of where we are right now. I don't know if you guys understand the concept of composite, but that's basically, I'm looking at this composite here, 19,700, and this level here, 20,200 for now. If we can get above this 20,700 level, then we go higher. If we find that 19,700 doesn't hold us support, then we're going to go lower. Right? It's really quite simple. Clues as to what's going to happen today in terms of the footprint here. What I'm seeing here is that the net longs have started closing, right? And a lot of shorts have started opening. Okay, you can see that on this move up. So there's lots of shorts opening, lots of longs closing. Okay. Meanwhile, let me just take this off a second, the longs and the shorts. Meanwhile, on the delta, you can see that on this move up, right, we've got a delta divergence. The delta is printing new lows. All right, let me just highlight this. The CVD is showing aggressive selling here, going lower, yet the price is going higher. To me, that means that these sellers are getting absorbed, and the divergence is bullish. Okay, so this is a bullish divergence, and that to me tells me that we want to head higher. Okay, there are a few guys that got trapped here at the highs, as always. You always see the bulls, the breakout traders getting trapped at the highs here, just like we saw these guys here get trapped at the lows. Now, obviously, these guys here that got trapped at these lows, they're trapped at round about 19,800, 19,900. Okay, so we've already kind of peaked down there. We might do another revisit down there. These guys want to get out of break even, so this could be a bounce here, right? There's going to be strong resistance here because these guys want to get out as well, around about $20,500. Okay, 20,400. But what I wanted to highlight to you guys is that we're doing higher highs and higher lows on the price, and yet the CVD since yesterday has just been doing lower highs and lower lows. Okay, so aggressive selling not reflected on the price, that means absorption. If we look at the yet even more lower time frame here, we can see exactly the same. Let's have a look at the delta bars. Okay, you can see here the CVD is printing new lows, so this one's lower than this one, and yet the price is printing higher lows. Okay, so this here is the composite values that I've just highlighted on the market profile, these gray areas here. At the moment we're toying with the idea of getting accepted back into this one. Okay, so this is the composite, 19,700 at the bottom, right? This was a previous level of resistance, as you can see here. You know, we go all the way up to there, came back down, this was resistance, came all the way down here. When we came back up, this was resistance. Now we've gone all the way back up to the composite value area high, and now we're finding acceptance back below. So this could be a decent short all the way down to 19,700. At 19,700, I won't be so keen on shorts because we could be holding that support. We don't short support. Okay, so I'll be looking for longs at these levels, or I would be looking for longs at these levels, but of course, if it fails, then I'm going to go much lower. All right, and again, if we do find acceptance above 20,200, 20,600, then we've got a very good chance of going all the way up to this composite here, and potentially even higher to that level that we've been talking about, around about 22,500, 20,700. Okay, I just wanted to show you here on the footprint. Let me just reset this a second. That we've got the same dynamic happening, right? So we've got aggressive selling at the bottom here. The price rallied. Aggressive buying at the top there, the market dumped, right? So we could just be ranging here for quite some time between 20,500 and 19,900, okay? But the absolute bottom for me, or the line in the sand, is 19,700, like I said, all right? So there's a bullish CVD divergence here. I think we could see a little bit more upside, and yeah, I wouldn't be surprised to see a little bit more of a uptick on Bitcoin for now. So I think that pretty much covers everything. On the daily market profile here, yeah, there's a naked point of control at 19,189, but that's already inside of the previous balance. And we've left a naked point of control here at 20,200. Okay, so I think that will probably get taken out. All the highs, there's no excess on these highs, but there is a naked value area here at 20,935, let's say 21k, right? So we do have a naked value area there, and we've also got another composite there. I think this is like the 6-day composite value area, so this could be a little bit of resistance. All right, so just bear that in mind. For now, it does look like we're just going to be rotational inside of there. So I hope this kind of makes sense to you guys. Like I said, 19,700 for support. If we break down below, we're going to go much lower. In terms of shorts, I'd be looking at 20,700. If we do break above 20,700, then I think we've got potential to going all the way to 22k. But I think the price wouldn't go much higher than that. Okay, 22,000. 22,800 at the very, very most. Okay, as you can see here, right? So round about that level there. So if we look at this on the yearly, $22K, 22,200 or whatever is basically the edge of this high volume cluster here, right? Where basically this 3-day order block is, right? This little order block here is, right? Which is also visible on the 4-hour. So that's basically it. If we go up here, then I wouldn't be surprised to see the price kind of like rotate back down again. But we'll just have to wait and see. I don't want to waffle for too long. I don't want to make it more confusing than what it already is. I hope this was useful. Yeah, and I'll try and do maybe another TA update for Friday if I've got the time, but I've got a lot going on in my personal life, so I might have time, I might not. No promises, but I hope this was useful. I hope you guys make good money with the trades. Just remember where we are in terms of macro. Nothing's changed. There's still a war going on. There's still energy crisis. There's all this shit going on. So don't get yourself all excited and very, very bullish. But like I said, there's still room for the upside. So yeah, I hope this helps you. Happy trading, and I'll speak to you guys soon. Take care. Bye-bye.